Hello everyone, my name is Lawrence and thank you so much for watching my channel. A channel talks about investing in stock market and also talks about financial independence. If you're new to this channel, please consider subscribing such that you don't miss other videos like this. Today I'm going to be talking about yet another great company that is making news these days because of its decision that it made and is making shares to skyrocket, and the shares are going up. Actually, if you watched my last video, I think it was early last month, the share was about 10 to 12 Kenyan shillings, but as of now, as I record this video, the share has increased by more than 100% to 25 Kenyan shillings. So today, I'm going to be talking about my opinions about why the share has increased, and if you hold it, what should you be doing? Should you be selling it, or you should be buying more of these shares? And before we start, as always, I always advise that if you're doing any research, if you want to invest in any company, please do your due diligence so that you make an informed decision. So as usual, I'm going to be starting to read through the introductory part of the company for those ones who don't know what National Media Group makes or it does. Second, I'm going to be talking about its financial position so that you understand why you should be buying it or selling it. And finally, I will be giving my opinions about this company, whether we should be selling it, whether we should be buying it, or if you own it, you should be holding it. So let's go direct to the news that it announced that is making rounds, or it is making this share to go up. So let's go direct. So as I said, let's go direct to the introductory part of National Media Group. National Media Group, abbreviated as NMG. This is the trading symbol actually that is on Nairobi Securities Exchange boss. So is a Kenyan media group listed on Nairobi Securities Exchange. National Media Group was founded by Aga Khan IV. This is actually the majority shareholder in 1959, and is the largest private media house in East and Central Africa with offices in Uganda, Kenya, and Tanzania. So you can see it has a very big competitive advantage when it comes to media. As you see, it is the largest media group. So in 1999, National Media Group launched NTV. This is a TV in Kenya and Uganda, and a news channel called Is FM. So let's go direct to what it does. As you can see, products, it goes to newspapers, magazines, radio stations, television stations. So these are the businesses that it does. If you read through here, you can see National Media Outlets. These are the media outlets that it has. The group publications include the East African. This is actually saturated in all East Africa. Daily Nation, that is mainly in Kenya. Business Daily Africa, that is mainly also in Kenya. Daily Monitor, this is a Uganda newspaper. And The Citizen, which is a newsletter in Tanzania. Taifa Leo, the Daily Nation, and Sunday edition of the same newspaper. So you can see, you can read through others. Let's see other companies that owns. National Media Group owns 76.5% stake in Monitor Publications. This is a Ugandan company, as I said, is one of the favorite newspapers in Uganda, and owns 93.3 KFM. If you live in Kampala and in Uganda, you know about these radio stations. One of the best English radio stations based in Kampala. It also owns 2 television stations in the country, NTV Uganda and Spark TV. Actually, in Uganda, NTV is #1 TV station, and Spark TV mainly for ladies. So you can see, if you live in Uganda and Kenya, you know that this company is one of the best companies in terms of management and in terms of business. So it's a really very good company. So I will not go far. Let's go to shareholdings that I love to talk about. You can see shareholding. The largest shareholder is Aga Khan, a fund for economic development, which owns 44.66. This company actually has been in media for a long time. Alpine Investments, that owns 10%. A National Social Security Fund, 3.44. John Kibunga Kimani, that's 1.54. Jubilee Insurance Company of Kenya, 1.07. Standard Chartered Nominees, and CFC, Stanbic Bank. So these are the top 7 shareholding companies. So let's go directly to the news that sparked off actually the increase in share price. So the statement, actually this was released by Kusoko. This is actually an online newsletter that publishes investment news about Kenya and other global companies. So you can see it says positive signal as National Media Group considers 10% share buyback. So it's a buyback. So let's read it through. You will understand if you don't know what buyback means. It says National Media Group is considering a 10% buyback of its 18 million and 854 to 229 ordinary shares. The board of directors disclosed Thursday. So these are the shares that the company has. So in the public cautionary notice, the board said the proposal was in line with the Capital Markets Authority regulations, which require company to inform investors about the plan to buy the shares. So actually this publication was there around 25th, just on 5th, a few days back in the media, if you read it. So a buyback, also known as a share repurchase, is when a company buys its own and outstanding shares to reduce the number of shares available in the market. So basically a share buyback is when the company itself buys its shares. So this one, it reduce, actually they are talking about it also by reducing the number of shares in the market and hence the supply of traded shares. So when the company buys its own shares, it reduces the number of shares, meaning the number of shares owned by people, it will reduce. So it means it will create less supply and more demand. That's what makes actually the price go up. Basically, that's what it means. So shareholders who retain their shares in a buyback effectively take a long-term view in hope of benefiting from higher price in the future. So this is actually the main explanation. RN says the Companies Act 2015 brought in a substantive change to company law in Kenya by providing for share buybacks by companies in Kenya. Initially, it permitted such a repurchase of shares by both private and public companies. However, it put on hold by CMA and Nairobi Securities Exchange raised the concerns. Following the publications of new guidelines by CMA, listed firms would now acquire their own shares from the stock market. Basically, it introduced this law of where the companies can buy back their shares. So the guidelines require a company to seek shareholders' approval, publish buyback announcements, and in national paper, not to offer more than 10% above the prevailing market price, to disclose the buyback results, among the other requirements. So these are the requirements that a company wants to buy its shares should be doing. So as we read through, so basically, as I can say, investors have responded positively to announcements with National Media Group's share pricing gaining 9.33 at 14 price. This was actually this was written some days back, because as I record now, the share price is at 25.35. So from actually, for me, the first time I made a video and I was buying, it was around between 10 to 12. So this is the original price that they were buying about. So if you bought it, you know, now you'll be having 100% or 90% capital appreciation. So that's how the share market, the stock market works, basically. So as you can see, this is a stock broker. It says a leading financial service provider said the buyback will reduce companies' cash holdings while boosting earnings per share, as there will be less shares in the market at the end of the period. So basically, that's what I said. Also, when when the company buys back its shares, it means there are less shares available in the market. Therefore, the supply will be limited, so increasing the demand of the company. So what is my take on buyback? Buyback is a short-term solution, but it's not a long-term solution. So this is basically the news. So let's go to its financials before I give my own point of view about what is happening. So if you can see its financials highlights from 1, 2, 3, 4, 5 years. 2020 is not yet listed. So you can see it reduced, the revenue reduced from 12.3 billion to 9 billion. So basically you can see throughout the last 5 years, the revenues has been declining. This is a red sign if you're buying any company or if you own any company and you start its revenues declining. This is not a very good sign for a company who would wish to buy. So you can see also this one, profit before income. Of course, you see it has reduced by more than 50%, actually more than 60%. This is also a red flag for a company which would be willing to buy or which you are planning to buy. You can also see the comprehensive income, the same as profit before tax. You can see it also reduced by more than 60%. So this is not a good sign for any company that really a person would be planning to buy when its incomes have been reducing for the past 5, even 2010, for the past 6 years. So if you can see the net assets, non-current assets, basically non-current assets, they are physical assets, the buildings, the machines, a lot of assets that you cannot easily liquidate if you want to buy. So they have been a bit consistent, not increasing, declining, increasing, which is not a very good sign. If you see non-current liabilities, these are basically you can see loans and also loans and debts. This is you see it is not alarming, but you see you can see it has been increasing over time, which is not good. You can see net current assets. This is also good actually, because net current assets means the money you can use anytime. It has not been reducing or increasing, but it's not bad sign, this one. So if you go to the equity, which means the real shareholding of the company or your shares or the real equity, this is, you see, it can see it has also been declining, which is also not good, a red flag. So you can see if you see percentage, the decline, it has also been declining in terms of percentage. You can see it has been declining all since 2015. So this is also not good for a company. You would wish. Another striking thing to me as a dividend investor is dividends. So if you see also the earnings per share, it has completely also been reducing. So there's nothing positive about actually the financial position of the company apart from the current assets, net current assets that have not been reducing. It means it has cash which it can be using. Also, which if you can see also the dividend per share, it has been reducing, and as of 2020 actually it did not announce any dividends. So if from this perspective of this financial position, personally I would be avoiding. The reason why I bought actually this company is because the price, the share price, they reduced, because when it reached almost 90 at 10 it almost reduced by more than 80%. And if you see actually here the profit, they have reduced by more than 60%. So this is actually in relation to the earnings of the company. So that's why I was buying it on between 10 and also 12. So basically that's the brief talk about this. So I will go ahead and say what is my view about Nation Media Group. Personally, if you haven't watched the first video that I did on Nation Media Group, you should first watch before you watch this, so that you can have the best idea why I was buying it. The reason why I was buying it, as I said, the revenues of the company have been declining, and they have declined by more than 60%, but the share price reduced by more than 80%. So that was the reason why I was buying it. But currently at 25%, I was actually, at the moment, I sold all the shares. I started selling from 17 to 18. The reason why I sold the shares of National Media Group, it was because actually there were other enterprising opportunities like Centum. If you know, I own Centum. If you know, I own KCB Bank. So I sold my shares to buy more of KCB Bank. So that's the reason why I sold my shares. But at the current price of 25 Kenyan shillings per share, should you be buying the company or you should be selling the company if you own the shares? Personally, at 25 Kenyan shillings per share, I wouldn't be buying, because almost it has increased to the percentage of 70%, equivalent to its annual earnings or reduced earnings. So I believe it's fairly valued, and it may actually continue going up. The caution that I always give people is don't buy a stock because other people are buying. Because I can see this pressure from 10 to 25, it is because people are buying because of pressure. I don't think people are evaluating the company financials. Another thing to worry about this company is it is most of its finances, it comes from print media. Actually, more than 80% of its finances comes from print media. And as you know, the era of print media is getting wiped. The reason why I believe in National Media Group is one thing. It has a very good company and its management is solid. So I will only start buying it again when it goes below 15, which is not likely. And if it goes below 15, I will still be buying it, because that is the price that I believe deserves to be given to National Media Group. Because as you can see, other companies like radios, like TVs, they generate income, but they haven't reached to, they generate like 10% to 15%. So if you buy it at 15, that is personally the share price that I would be buying this company. Otherwise, as I said, always, every day, please don't buy a company because of the news, because someone is buying it. Because as you said, this is the news, they haven't bought shares back. Things may refuse, things may fail, and you find that you're disappointed if you're buying a company simply because it has announced that it's going to buy back the shares. At least wait. If you're buying it at 25, they first buy back the shares, then you can buy the company. Because I believe the moment they buy back the shares, of course, the shares will go back. Then you can start buying them. As I always say every day, please, if you don't understand, if you have anything you want to do in terms of investment, do your own thorough research. If you have your friends who are in financial section and you trust them, ask them, or go to your broker for a professional advice before you buy any stock. Because a stock market, you can also lose money, in fact a lot of money, if you make a wrong decision. And as I always say, if you have any question, you have any comment, just leave it down below. And don't forget to subscribe if you're new to this channel, because it means a lot. When you subscribe and like or share the content, it will also be recommended, and many people would be able to access my videos so that they can learn or share anything they have when it comes to stock market. Thank you for watching. Have a nice day. Bye bye.